Good afternoon. In this video, we're going to go over this week's options watch list. Before I get into the watch list, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please subscribe to the channel and like the video. Now, looking at the economic calendar this week, obviously we have a 4-day week, short week. So today we have off because of New Year's. We have OPEC this week. Now we have ISM manufacturing PMI and JOLTS job openings at 10 a.m. on Wednesday. We also have FOMC on Wednesday. No Powell. So I've been noticing that the FOMC days without Powell ends up performing the best because the IV and SPX has just been crazy where you have to actually play like a 100 to 150 point spread. It just makes it really ridiculous. And then when the news comes out, the IV crush happens, and if you don't take the move, that you end up getting crushed, or the move's not nearly as much as it should be. But without Powell, the IV is very, very low, and you can usually get at the money really, really cheap. And they end up, even on a small $2-3 SPY move, that they end up going 200-400% very, very, very easily because there's no implied volatility. But when Powell speaks, that you have the implied volatility is through the roof, and you end up playing way out of the money, and you're lucky to get 100%, 200% tops. But without Powell, you just get a lot more better plays, and you get more range and stuff like that. So this FOMC is going to be fun to play because of that, and hopefully it will be a good mover. Now, as far as the rest of the week, Thursday we have unemployment, non-farm unemployment change Thursday morning, and Friday we have unemployment change. This is non-farm unemployment change. Now Friday is unemployment change, unemployment rate, hourly earnings, and we also have ISM PMI on 10 a.m. on Friday too. So we got some data coming out this week that can really, really move the market. So that could be some fun days right there. The put-to-call ratio is really not that bad right now, so I'm not even going to look at that. VIX, VIX is really acting really, really weird. It's not really down. I mean, it's not really up that much considering how much SPY has been down lately. So it's been kind of like chopping around and sticking in this $22 to $21 range, or even 20 to 22. So if the market is strong this week, we probably could see VIX get under 20 to even. I'm even thinking that I wouldn't be surprised if we even see some of these $18 days down here, because you can see right here $18 close to what, $18.50. But then over here we're getting down to the 16-15 level. We haven't been down that low since COVID, so that's when the Fed was pumping the market, pumping all kinds of liquidity into it. So that is coming out. So we'll have to see what happens with VIX, but VIX is just not going anywhere. VIX is broken. SPY, just pulling that up. Now SPY is going to be, it's just staying in this channel right here. It's got to get out of this channel. I think with the data this week and FOMC, that maybe we'll get out of it, hopefully. So I'm going to watch for calls over 384, fill the gap to 385, 386, and you get 390, and you get gap fill up here in the 395 area to 400. So SPY is still pretty low. We can, even though it's been consolidating right here, we could definitely go lower, but I'm watching it on both sides. I'm watching it for a push up to 400. Now, we haven't had a strong short squeeze day on a SPY like this in a long time, or like this, or like this. So I'm anticipating that we might, if it gets out of this 385 range, we could end up seeing a shoot to 390, 395 really, really fast. So Watch that level for a break up. Now also watching it for a breakdown to underneath the 378 level. Gets underneath 378, which is right here. Then you get this 376, 375. Breaks this 375 level, then we get some area for it to fall down to 370, 365, 360. Now the Fed pivot is not bullish whatsoever, and historically, when the Fed pivots, it drops another 20-30%. If that's the case, 10% would be right down to the 345, 340 level. 20% would be down to the 310, 305. So I mean, we could easily see 300 possibly if the Fed pivot holds to its historical pullbacks. Based on the history, it's been pulling back 20 to 30%. So definitely could see 300. Now my prediction for 2023 is that I think that we're going to end up pulling back, probably that close to that 300 range, 320 to 300, and then we probably end up seeing a rally into the summertime. So this is what I'm thinking: winter, spring dump, and we rally summer to fall into winter of next year. So we'll have to see if that actually happens, but that's why we day trade. I can't predict the future. I don't know if that will happen. I'm just giving my thoughts. I could be completely wrong, and that's why you just trade one day at a time and just trade what the market gives you, not what you expect it to happen. So that's been a big play for the last couple of years, is just to play what the market gives you. So definitely watching both sides on SPY. I gave you the levels on that. Now, we haven't had any, we got earnings coming up. Who knows if they'll be disappointing or good. I have no idea. I think Amazon's will be good, but I could be completely wrong. But the thing I'm thinking about, every time earnings season comes up, I always think of Netflix. Netflix usually has massive runs up. It's pulled back from its 330 level and is pulled back to the 275. It's looking pretty good. So I'm thinking that maybe if we can get over this 295, 300 level, if it gets over 300, we could see a strong push over 300 to fill this gap right here, which was from, what day was that? 12.15, 12.14. So get a gap fill right here. I think that if it gets over 300, we could see a strong earnings run on a Netflix and fill that gap. So definitely keep an eye on Netflix for that. Amazon is just, it had record-breaking Black Friday and gets hammered on. I guarantee you, I can't guarantee you. There's no guarantees in life except death and taxes. But I'm thinking that it had a record-breaking Black Friday. It's probably going to have record-breaking sales. Everyone's Christmas shopping on their credit cards. So the debt crisis, credit card crisis is going to end up being really, really bad in 2023. But everyone's going Christmas shopping on their credit cards. So Amazon's probably going to have strong earnings. My prediction, I think it will. Who knows? I could be wrong. So I'd watch it over 84.50 or even 85. Or push to 86. Get gap fills at 86. Push to 87, 88. 90, 92, 94, 96. I think if it gets over this 85 area, it's going to make it a strong push to 90. We could see a run to 100. We get gap resistance right here at 105. So I wouldn't be a bit surprised if we end up seeing something really strong move out of Amazon. So Meta. I'm looking at this. I mean, it had a nice little gap down. It started to fill the gap, then it just chopped sideways off this 20 EMA. It gets underneath. It gets bought up pretty quickly. So I'm looking at it over 121, push to 122, 124, 124. It gets over this 124, 125 level. See it push to 130, even 135, 140. So we could see a strong move out of Meta, assuming the market is going up and doing good. Sometimes these stocks, like Amazon and Tesla, I'll get to Tesla in a minute, they just don't really care what the market's doing. It has a mind of its own. But Microsoft, I mean, it's dropped down to the RCT trend line right here. It bounced off from it. It's looking good. So I'm going to anticipate that it's going to hopefully have a nice strong run. Now we're getting like an inverted head and shoulders right here. The left head, right shoulder right here on the hourly. I'd watch it over, let's say even 241, push to 245, fill that gap. The 250 has been a huge magic number for Microsoft. Once it gets there, it kind of rejects, and it's been a huge pivot for Microsoft for a very, very long time. You can see on the hourly, it gets bought underneath 250, and now it's resistance. So it gets to 250, it's going to have a hard time. That if it finally does get over to 250, we could end up seeing a strong move to 260 on Microsoft. So we'll have to see what this earnings does. If this earnings is bad on a lot of stocks, that we could end up really taking a hit on SPY. I mean, Apple, I think the other day or this past week, said they were concerned about their iPhone 14 sales, so that's not going to be good if the Apple ends up losing. But we saw it last earnings season where Amazon and Microsoft missed, and Apple popped and brought that up. I can't remember exactly what happened, but a lot of the stocks ended up missing, and Apple ended up saving the market. So, but Apple has a funny thing of doing that, is that Apple's notorious for knowing that it's going to tell its investors that sales are going to be struggling, or they lower their guidance. So everyone thinks because they are going to have struggling numbers and they'll lower their guidance, their earnings is going to be bad. And yet when earnings comes out, Apple pops because they lowered the net. If they can't hit the ball over the net, they just lower the net, lower expectations. So when it does beat expectations, everyone's like, wow, they did really good. They did better than what they were expected, even though they lowered it. So it's kind of the bullshit that happens during earnings season. Apple's notorious for doing it. It does it all the time. But anyways, enough with that. I know this watch list is probably going to be long and rambling, but it is what it is. So watch Tesla over 125, or even say 124.50. I know it just posted out its numbers, its delivery numbers, and they weren't that good. But who knows? Tesla just has been beaten down so much. Who knows? Maybe it's priced in. Maybe it just anticipated this. And Tesla sometimes, when it has bad news, it's good news and just rages. So we'll have to see how the market reacts to it. I mean, I know it's bad, and people will probably go jump in puts tomorrow right at open, and then all of a sudden it will squeeze everybody out, and they'll be like, okay, they had bad news. Why is it squeezing? It's squeezing because everyone's jumping in puts. So. Plus on the weekly, it's down so much. I mean, I'm surprised it didn't. What was the low of this candle? 108. It didn't quite get to 100, but maybe it gets to 100. But I don't know. I'm thinking that maybe this is possibly the bottom, but don't quote me on that. So who knows? But definitely over 125, 124.50 to push to 130, 140, 150. Tesla has a short squeeze. We could end up seeing an easy $15, $20 move out of Tesla. So we could shoot up to 140 very, very easily if we get a short squeeze tomorrow based off those delivery numbers. We'll have to see what happens. So that's why you need to be in the room. We'll just take it day by day and go from there. So that's going to do it for the watch list, and hope to see you in the room. Thanks for watching.